Hey traders, it's John Fortune here, this week's Weekly Forex Forecast for the 28th of September to the 2nd of October 2020. As always, we're going to start off by looking at the US dollar index and crude oil before running through a number of markets, looking at the key levels of support and resistance in the process. I'm also going to be highlighting some of the targets we're going to be looking for in this coming week and also for the weeks ahead. So I hope you're having a nice weekend. Let's jump over to the charts and see where the money is this week. As always, we're going to start off by looking at the US dollar index. Now, last week we started the week right here, and we highlighted in last week's video we were looking for a rally into the next key of resistance to the upside at the 94.32, which was right here. And we did have a really nice rally into this target set from last week. Very simply put, going into this week, the dollar index is currently structured to the upside in the very short term. It is overall still in a bear market, but this is a correction to the upside in the overall bear market. As a result, we do go into next week with a view to further advances to the upside in this market. We're sitting right at the top here, so what we'd like to see going into next week is a correction back down towards the 93.03. Any correction in this area is going to be viewed as an opportunity for further advances in the dollar index up towards the next key of resistance, the upside of the target set, the 95.72. So we do not trade the dollar index itself. We are using this as a compass, as a guide. What this means is we do go into next week with a bullish bias on the US dollar. And as a result, we would favor dollar long positions in the dollar pairs going into next week. So the next market we're going to look at is crude oil. Now, in previous videos, we did highlight the fact we were looking for a pullback towards the 42.63 before further declines to the downside. We did start to break down last week. We started the week in this area and we started to sell off. However, we really didn't go very far in this market. We just kind of sold off a bit and moved sideways for the rest of the week. So very simply put, going into this week, we are now sitting right in a place where we are going to once again look for short setups in this market, so bearish breakouts to the downside of this corrective move in crude oil next week. And if we start to get the right kind of bearish setups in this market, if we start to break to the downside here, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 34.35. So next market we're going to look at is euro dollar. Now, last week we started the week right here and we were looking for a sell-off in last week's video down towards the target set at the 1.1659, which was right here. And we did have a really nice move taking out this target set from last week. So very simply put, going into this week, we are focused on further declines in this market. Any pullback, as we are down near the lows here of this sell-off, any pullback in this area next week is going to be viewed as another opportunity to start to look for short positions in this market. We're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 1.1454. The next market we're going to look at is pound dollar. Now, we started the week up in this area last week and we were looking for a sell-off down towards the target at the 1.2667. We had a really nice move down towards this target last week. We stopped just shy of this by a couple of pips. So we just missed the target by a couple of pips, but we still had a very nice sell-off down towards this area. Going into next week, therefore, anybody not involved from last week, it's going to be very difficult to enter short positions here with the next key area of support to the downside right here because the risk to reward is not going to be very good. So we're going to be looking for one of two things. Either we pull back and we start to correct towards the 1.29260, in which case this will provide anybody who isn't short from last week or who didn't short this from last week for another opportunity to look for short setups down towards the next key of support to the downside and the target set at the 1.2667. Or if we come down and we take out this target next week and we start to bounce to the upside, this will once again offer another opportunity to go short down towards the next key of support to the downside and the target set at the 1.2531. The next market we're going to look at is US dollar yen. Now, last week we were looking for a correction to the 106.040 for further declines to the downside. The overall market is still structured to the downside, so overall we would still prefer short positions in this market, but you can see any short positions here would be going short the US dollar against the Japanese yen, and we've already established that the dollar itself is fairly strong. So this can be used in one of two ways next week. Either if you think that the dollar is strong and you don't want to take any dollar short positions, you could just leave this market. You don't have to trade this pair next week. Or you could use this perhaps as part of a synthetic hedging plan, which simply is this, that if you were to take euro dollar to the downside and you were to short euro dollar with a 2-to-1 risk to reward strategy, let's say, and you were to also short US dollar yen with a 2-to-1 risk to reward strategy, and for whatever reason the dollar unexpectedly weakened, let's say the central bank in the US came out and devalued the dollar, as we know is currently an objective of theirs, and you saw euro dollar rise and you were stopped out on your euro dollar trade, okay, for 1x, so say you lost 1 times whatever it is you risk per trade, the US dollar yen would still decline and you would make 2x over here. So overall, you would be up 1x over the 2 trades. So you can use this either way. You can completely filter this out, or if you want to add this in as part of a synthetic hedging plan, you can as well. But overall, we would prefer any breakout to the downside here. If you are looking to trade this, any breakout to the downside would be the opportunity to start to look for a pullback. And this would be a great chance to start to look for further declines to the downside in this market, down towards the next key of support to the downside of the target set at the 103.56. So next market we're going to look at is Aussie dollar. Now last week we had a near-term trend reversal in Aussie dollar, and we start the week below a key area of broken support from the past, looking to potentially turn resistance at the 0.72810. Any correction in Aussie dollar to the upside is going to be viewed as a great opportunity next week to start to look for short positions. And if we start to break out to the downside after a correction, we're going to be looking at initiating shorts down towards the next key of support to the downside of the target set at the 0.6809. So next market we're going to look at is New Zealand dollar. Now we are structured to the downside in New Zealand dollar also, and we may be in the process of forming a head and shoulders reversal pattern in this market. We're very close to the target and the next key of support to the downside, so there's not going to be great risk to reward opportunities in this area. What we would like to see therefore before we take out this target is any correction in this area back towards the 0.67420 is going to be viewed as a great opportunity next week to start to look for bearish setups. And we're going to be looking at initiating shorts down towards the next key of support to the downside of the target set, the 0.6489, and if we can get a breakthrough here, we're going to be looking down towards the next key of support to the downside and target 2, the 0.6384. So next market we're going to look at is US dollar Swiss franc. Now last week we started the week down in this area, and we were looking for a rally to the upside in this market towards the 0.91970, which was right here. And we did take out this target set from last week. In fact, we smashed through this target and we ended the week up in this area, roughly at the 0.9300. So very simply put, going into this week, we are looking for further advances to the upside in this market once again. We're sitting right at the top of the move. We don't like to go long up in this area. So any correction next week down towards, although it's unlikely we're going to pull all the way back down to here, but any correction towards the 0.91140 next week is going to be viewed as another chance to start to look for bullish setups in this market. And we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set, the 0.9367. So next market we're going to look at is US dollar CAD. Now US dollar CAD was another really nice move from last week. We started the week down in this area right here, and we were looking for a rally into the 1.33290, which was right here. And we did have a really nice rally into this area, and we started to break slightly above it from last week, and we're sitting now roughly at the 1.3400. So very simply put, going into this week, we are still focused on bullish setups in this market. We are looking for further advances to the upside. Again, since we're sitting right at the top here, what we'd like to see is any correction in this area down towards the 1.32070 is going to be viewed as another opportunity to start to look for bullish breakouts to the upside. And we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at the 1.3499. And last but not least, we have gold. Now, the last 3 to 4 videos, we have noted that the uptrend in gold was intact, but we were in a multi-week correction. I did point out that this was not really a market I was favoring too much because of that correction, and I would rather see a breakout. I'd rather wait for the initial move in gold one way or the other before I start to allocate capital into this market. And last week we did have that to the downside. We started to sell off and we have this momentum coming into this market. So very simply put, going into next week, I do see gold as being back in play once again. What I would like to see is any correction towards the 1948.95 is going to be viewed as a great opportunity next week to start to look for bearish setups. I'm going to be looking at initiating shorts down towards the next key of support to the downside of the target set at the 1815.28. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. Big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best with your trading next week. The only thing left to say is take care and don't forget to trade safely.